Good afternoon, everybody. Welcome to the Church of Merlinology. Didn't think we were creating a religion over here in Southern California, but anyway, glad to have everybody with us. Hope you enjoyed your weekend, a 3-day weekend for those of us that are trading the normal equity markets. Of course, if you're trading crypto, there are no weekends. It's all one continuous slew of fun. Good to see you, Katoot, Gary, Randall, as well as Joe, Doug. We got Sue, we got Glenn, we got Gary. We got two Garys, Gary Lento and Robinson. I'm doubling up on the G's. Les starting things off with Tomasina. Good to see you, Vernon, as well. I'm going to walk you through a little bit of kind of my thought process on today's market. I was actually looking to, allocate some of the capital for my 1% account, but I couldn't find anything. So I'll walk you through kind of what I was thinking there, what I might look for going forward in some other accounts, because on a day like today where you have 2% up moves, not really a lot of very good put selling opportunities. And that one, my particular big account, that's what it's predominantly for. So I'll walk you through everything I'm looking at, and I thought the topic would be good because I had a question asking me, do I think the bottom is in? It came in today. So I thought, we've talked about this quite a bit, and I thought this graphic really kind of did wonders. Markets, half full or half empty. Well, we're always taught, at least I believe that we are taught as kids, to be the optimist and look for the glass, half full type of approach, because it means you got more to go. There's still some more upside potential. You can do better. Go for it, Timmy. Well, then you have people like myself who are in the half empty side going, man, it's draining quick. This could be empty soon. I'm not usually that pessimistic, but I think it's interesting to look at the markets from that perspective, because if we look at today's action, a lot of people saying, hey, this is that dead cat bounce. This is that market rally. And we're going to, start a new bull market rally from here. And while we very well could have, certainly that is a possibility, the odds are rather slim just given what the probability of direction is. So let's start things off. I'm not going to start with the charts. I want to actually show you economic data first. Let's start here and work our way over to the charts, because I want to make it a point to start each day when I don't have a guest with some economic data, because this is obviously what's driving the boat. The Fed is driving the boat, but this drives the captain. So if we look at this data that came out today, I'll certainly focus on the U.S., but there was some other market pieces here as well. And that is, come on. Sorry, I'm messing up screens. I got to do that. There we go. That's what I wanted to show you. You start things off in Canada, which they were expecting a very dismal retail sales number. Their core retail sales came out dismal. It went from 2.6% to 0.5%. That's when you take out we take out transportation. So if you remove transportation out of this, their retail sales in Canada did appalling. But if you leave transportation in, retail sales actually spiked. So it looks like most of the consumption in Canada, transportation, vehicles. Other than that, this number here is probably my most interested number, which is the existing home sales. For those listening to the podcast right now, the previous number was 6.5 million existing homes sold, and they're expecting that to drop to 5.4. So 5.6 to 5.4, basically 200,000 less than the previous month. Okay, that might be good, might be bad. The number actually came out at 5.41. So while it's better than expectations, you can put a little check mark here that's positive, it still is negative because of where it came from. It went from 5.6 down to 5.41. So not good overall with regards to home sales. Again, it's the new home sales, the one I'm really interested in. We'll talk about Lennar here in just a second. Some other pieces that are happening are just not as big. You see New Zealand in there as well, seeing their GDT price index, which is actually fairly good. It means that prices are dropping for New Zealand, but of course they've been aggressively raising their rates. And that's pretty much it for the economic data today. So let's start things off. I'm going to run through from the bottom to the top, start with the commodities, start with gold. When we look at this price chart here, I guess I could, if we wanted to, put a yellow box around the price action that goes all the way back into early May, where it's really just been bouncing back and forth between 1880 and 1800. So an 80-point range for gold. And right now you're just stuck in the middle of it. So I really don't see anything noteworthy or interesting with gold personally. Of course, you guys know I'm still in SLV. And that is still just traversing sideways as well, and nothing going on in that bad boy. Crude oil, on the other hand, had a nice day, at least a little bit of a bullish harami formation. For those of you who are candlestick practitioners, you've got a bullish harami here today because today's trading activity is within the entire red candle of the previous trading session. Today, crude oil was up 1.61%. Now, that doesn't mean it's going to rip all the way back up to all-time highs, but at least it's stabilized. It was a pretty ugly week and a half to 2 weeks for our markets overall, and crude oil finding itself a little bit of a footing. We'll see if this one holds. Now, Bitcoin. This was an interesting one. I'll kind of spend a little bit more time on this later. But you see Bitcoin having a bullish engulfing pattern today where it had a really wide range, a green candle that engulfs the red piece from yesterday, so almost a bullish engulfing, up 1.83% today, closing at 20,845. Now, I'll ask you guys, just kind of out of curiosity, what major event happened today with regards to Bitcoin, right? What came out today that could have been one of those kind of predictive moments where you can time the market bottoms or time the market tops? And to show you, I will actually just scroll back here and look at the price of Bitcoin over time. So if we go, let's see, when did... I have to pull up the exact date. Let's. I want to know the exact date. Bitcoin futures. I know it, but I just can't remember off the top of my head. Bitcoin futures. When did they created? It was like December 7th, 2017. Yeah, it's 2017. So if we look back on the Bitcoin chart, if I can get it all the way back to 2017. There we go. You want to watch me scratch my head in curiosity. Here is your Bitcoin. We'll go all the way back to 2017 because that is the last monster bull market rally we had. And if you notice I think it was beginning of November or beginning of December, right here is where Bitcoin futures came out. Right there. And markets imploded from there. And then you go back into 2020 and you notice that our market started to sell off when we got Bitcoin ETFs, which was right about there. And today we got a short Bitcoin ETF. So it seems like every time a Bitcoin ETF comes out where you can go long Bitcoin, it's at a market top. And if you have it now where it's all of a sudden you get a Bitcoin inverse ETF, so now you that are loving to short Bitcoin, you can now do so by buying an ETF called BITI, B-I-T-I. It might signal a bottom. So I thought that was kind of interesting seeing how exactly opposite was. Correct, Rob. Rob nailed it. Got a ETF short for Bitcoin, and that ticker symbol is BITI. Kind of a weird looking chart at this point. It came out today. However, you can see there's a print that goes back to June 2016. That's before you even had Bitcoin futures. So maybe this was just some old symbol, or I'm not exactly sure why we get that bad data. But in theory, this should be inverse Bitcoin. It has very low volume. If we look at this on a daily time frame, you'll see, obviously, first day it's not going to be widely accepted. You had 177,000 shares of it traded today. Who knows, maybe over time, this will give you guys opportunities to go both long and short without needing to go internationally to Bitcoin futures exchanges. But BITI is that Bitcoin ETF short. Now, who knows? It's not like we need it, but I assume with the way that our greed for leverage is going to work, that at some point we're going to have doubles and triples. Can you imagine having a triple Bitcoin long or short ETF? I mean, the thing already moves 15, 20% in a day by itself. We don't need triple leverage on this one, but it could happen in the near future. All right, so that's your Bitcoin change today, and I got a lot of questions about crypto, which we'll talk about here in just a minute. Let's move up from, they've all changed. There we go. I was on Bitcoin. Now we get to the main four. Again, our ETFs that represent the broad market, or futures that represent the broad market. Here is the Russell 2000 on the day, up 1.84%. A little bit of a follow through from the previous session. You can see we had that kind of, again, a harami formation. Now we got follow through on that one. Looks great, but for me, I guess I can move these lines down or create a new one. I'm trying to find points at which I may be interested in going short. So I could break this into a smaller time frame here, but to me it looks like we're going to come right back up into this area here between 1730 and 1760. That will be my area to look to be going short. Now I am still in, if you look at that glass half full, half empty kind of scenario, I personally think that the glass was overflowing. I think that we're on the left side here, was absolutely overflowing, and now all of a sudden water's draining out of it. And I think that that's going to continue. How far? I don't think we'll get to this point over here where we have the shattered glass that doesn't hold any water, but I do think you'll see some water come out of this and slowly bring this market down, more in a recessionary environment, which I will explain in a minute. So in this case here, I obviously today in my 1% account, I'm looking to be selling puts. That's kind of what I do in that account. Looking to go at least 1% out of the money. I didn't find anything that was appealing today because markets are rallying, looking good. I want to be selling puts when markets are crashing and have fear out there. So I may look in other accounts, not in my 1% account, but in my other accounts, to actually buy directionally if we get up into these supply zones that you'll see on these other indexes. So there's quite a few levels coming up here. Russell 2000 is one. It was up 1.82% today. Here's the Dow, 2.25% move up. Again, you can see it's coming up to levels that we saw just last week. It's not like these are time-tested supply zones. However, when you have a big aggressive move down, you do expect there to be a pullback. Some call it a dead cat bounce. Some call it a bull trap. Bring us up a little bit and then continue on down. But I definitely feel like the higher probability here is that these markets are going to hit a supply zone and then continue to sell off. You've got the NQ. So NASDAQ today up 2.52%, 11,581 is where we closed, and you notice it also is coming right up into that area of supply. If I were to draw a little yellow box here, which I guess I could, I'll start by drawing it right here, but that is not where I think that box should be. Right, that is just a starting point for me. What I'll generally do is I'll break this down into like a 4-hour time frame, and it actually is where it should be, at least for the way I draw zones. Right, so I'm going to be going from that peak to this little valley right here. Oh, that's pretty much it. I can't get that one. Yep. So pretty much right where I had it drawn on the daily. Sometimes when you look at the 4-hour, it'll break it down, and you notice that today it actually came right up into that supply zone and hit it today on the NQ. So curious to see what happens tomorrow. I really kind of feel, I know I sound kind of conflicting here or contradicting, like I feel like the market does want to have a little bit more of a rally. I'm just kind of what I expected to happen last week off that FOMC announcement. I kind of expect there to be a little bit of a relief rally, as I think it was Karen was asking earlier. What's causing all this? What's the driver of this market rally? I personally, I think it's people bottom fishing, thinking this market has bottomed. You started to hear a couple more positive stories. The market's doing okay. It's okay. The economic data is what's telling me it's not doing okay, and we'll probably see more downside. Finally, S&P 500 was the winner today, beating the NASDAQ by just 2/100ths of a point, or 3/100ths of a point. It was up 2.55%, gaining 93 points to 3,769.5. I've got that line drawn there because I will be looking to buy some puts directionally if we get into that yellow box supply zone, which for those who are interested in the numbers, actually, let me do this. I didn't taper this one down to the 4 hours. Let me real quickly look and make sure. Actually is a little bit bigger. We'll put it right to there. Okay, now if you really, this is where you start to split hairs. Like I could go into the hourly here and really whittle it down, and that would get me a zone that's even much higher than that. I could say, bring it all the way up to 38.13 or 38.20, but we'll leave it where it's at for right now, just to give me a reference point. So what's that zone showing? That zone on the S&P is showing me, looks like 38.45 down to 38. No, that cannot be a 1-point zone. Come on. Get this out of here. Get that line out, and I'll just click this box. There we go. 38.44 to 3800. So basically a 44-point range for supply there. I'll be looking for that tomorrow. Merlin, if you are bullish on the Dixie, should we get out of gold and silver? It's a great question. I almost feel like I'm kind of hedging there, Rob, because I am long silver because of the traditional flight to safety for gold and silver, right? When you have a market in turmoil, generally that's where money flows to it. And, the thought process normally is, okay, you put your money in commodities. If you have a weak dollar, that's going to help those commodities as well. But in this case, we've got a strong dollar, which actually hurts gold and silver. So, yeah, I'm a little bit conflicted there myself because I am still bullish on that dollar. I'll take a peek at the Dixie here today just so you guys can see that. We didn't have much of a day, kind of a little bit of a hammer formation, but it's not really at the bottom of a downtrend. I do think that we will see in the next couple weeks, this dollar index breaking that 106 mark, getting to 106.50, and then even creeping up from there. So I do have gold, physical gold and silver with SLV. But you're right. There should be an inverse relationship there, meaning if that dollar keeps going, it shouldn't really help out silver or gold. So that's a decision you got to make. I am long on silver and gold, even though I am bullish on the dollar. I just think that the overall pain in the market is going to drive people to alternative investments, regardless of the price of the dollar. It's a little bit different than the historical norms, that's for sure. Let's see. Tom says, can I buy those triple leverage Bitcoin ETFs with margin? Asking for a friend that likes... Who knows? I have a real hard time thinking that the FTC or the SEC will allow those. I mean, it's bad enough that we finally have a futures ETF, but boy, you go triple leverage. Goodness gracious, that's going to be a total mess. How do you select your long put strikes? So what I'll be doing when I go to the long put strikes is I'm really just going to be going out and looking at areas of demand. So most of mine are going to be on SPY, right? So I'll be going out and looking 90 days. I'll take that print out, that was a great piece of history for us. I'll be looking out for levels where I think that there's a good chance of it getting to. And personally, the one that screams out at me right now is going to be right around this 126 mark, 127. So I would look and see what that strike price was and see how far. One of the things I always like to do is I always like to measure out exactly how far it is. So let me take this line here. I don't want to put it too close to price. Part of the reason I'm selling these is if I'm selling puts, obviously that impacts my rate of return. If I'm buying directionally, normally what's the determinant for me, and this is going to come across as very different from what most of you are going to look at, is the price of the option. I personally like to be in cheap options, and the reason for that is simple. When you go to sell those, let's say this thing does traverse down, and that's about, let's call it 13% decline from current price. I would go out 90 days plus on the purchase if I'm going directional on those options, and I'll see what the option strike price is like at that zone. And if it's a nice cheap one and the premium is high for that day because I want to sell it on a pain day, then I'll pull the trigger. But I'm going to wait another day or two and see what happens. I would ideally, the perfect week for me this week is going to be today's Tuesday, obviously. Wednesday, we get a nice rally up in the supply zones. I can buy a bunch of puts directionally. Market starts to sell off. It sells off into Thursday and Friday aggressively, and I can then go and sell puts and collect some premium to buy this market lower should it fall. So hopefully I can get the double whammy this week, but you never know. Maybe I won't. Maybe I will. Good news is I got cash right now, so I'm not too worried about it. Let's see. There's a bond auction on June 22nd, 23rd. How they affect the stock market? Well, I mean, there's a couple different metrics. The good news is this Thursday we can talk about those bond auctions because Bill Addis is going to be my guest on the show. I'm hoping, fingers crossed, that I can get Trey Lazara, who's the guy that runs Trade Pro Futures, to talk about the futures markets and platforms because I know there's a lot of questions, margin rates, and all that type of stuff. So he hasn't responded back to me. It's a danger sometimes with Trey, but hopefully we'll get him on the program for tomorrow. But with regards to bond auctions, they're looking at two things. Number one is what was the interest rate that those bonds sold at, but that's kind of telegraphed. I mean, they kind of know what that's going to be. The other number is, I forget the exact calculation of it. It's like how days to cover ratio. Hey, Big Ab, good to see you. Glenn, I'll get your question just a second. I'm playing both sides here on the option side. So we'll break down what Bill Addis's thoughts are on those bond auctions. But yeah, they can certainly have an impact on the markets. And if you see a big spike in the interest rates, that's going to be negative for the equity markets. But if we look at the 10-year, we're going to have the 10 and 30, I think. Let's go to my 10. There's the 10-year. We've had a pretty big surge in the past few months, and right now it feels like it's sold off. It's starting to trace up a little bit, but it's not really aggressive here moving up. Same thing with the 30-year, right? You got it moving up a little bit. I'm optimistic that we're going to get to that 3.5% for that 30-year, which we just barely kissed 3.489 last week. And then you look at that 10-year, if you see the peak from there, we actually did the same thing. We had a high of 3.495, so not quite 3.5. That bond auction might give us clues as to how high this could go. So that's the basics of it, but I'm not putting all my emphasis on it. It's just something to keep an eye on. And, when you know that announcement's coming out, maybe want to back away a little bit because wild things can happen. So Glenn, two things. I'm looking for the bigger percentage gainer by buying directionally. So in this case, I'm expecting the market to rally up and then sell off. So while the market rallies up, I'm going to be looking to buy puts because the puts are cheaper, right? When market's rallying, people don't, the premium for puts is really, really low. Therefore, I will buy those because the premium is cheap. I'm anticipating that market rolling over, so I'll get a bigger multiplier there. Who knows? It might be a 2-to-1, a 3-to-1, or something like that if it really starts to fall fast. In another account, I have one goal and one goal only, and it's a large account, which is just sell options. I am just selling options. I'm collecting between 1% and maybe 2 or 3% if I feel aggressive per month. And I can't do anything else in that account. I'm not allowed to buy directionally in that account. I can only sell puts, and if I get executed or assigned, then I can sell calls against it, but I can only be a seller of them. So in a sense, I'm bearish on the market by buying the puts. If we were traced back up into supply, let's go back to the S&P. It's a matter of, the way I'm playing it is it's a matter of probability. So for example, if we look at this chart here on this daily, I'm assuming, which we know what assuming can do, that it's going to rally back up here into the supply. Therefore, I'll be able to buy put options very cheap. So gets that supply, I'll buy some put options, and then I'm anticipating it selling off. And I'm anticipating it selling off into maybe some previous areas of demand like you have right here, which is a bit further away from price. Let's call it 32.50, right? So what I'll be doing is I'm going to be selling puts, if I can, at 32.50. Why? Because I'll be able to collect some premium, and my target's going to be 1%. I doubt I'll get 1% that low, but we'll see what happens if it hits it this week. So two things. I am still betting it's going to go down by buying the puts, but I'm also saying I don't think it's going to go past here. Therefore, I will sell puts at this level, collect 1% in my long-term options account where I can only be a seller, and therefore it would be a win-win. Can you do better with selling calls? Yeah, but I'll never do... I would never do unprotected. I only do covered calls. So if I have a position open, I will sell calls against that, but I'm not going to sell calls naked. I just don't do that. Why do you only use the one strategy for that account? What's the benefit? Good question, Jeff. It's just a personal thing. What I've found, and this is for me, again, you guys are all going to do things slightly differently. Years ago, it all started with a day trading account. So I was, as you guys know, I was a very active day trader. Or as I've told you, I was a very active day trader. My average was 550 trades a day in the late 90s, which is insane. Stupid if you ask me now. But that's what I did. I was just purely a day trader. And I told myself, I'm a day trader. That's it. That's all I'm going to do. And then there were times where I'd get to the end of the day, I'm day trading, and I've got a trade that just is slightly negative. I'm like, you know what? I don't want to take a loser. It's going to gap up tomorrow. And next thing you know, I take it overnight and it gaps down against me. And now I've got this losing position that I got to manage. And then you start convincing yourself that it's going to come back. And you're like, oh, it'll come back. You know what? I'm going to hold it for, it's now a swing trade. And it keeps dropping and dropping and dropping. Next thing you know, you're like, it's a position trade. Next thing you know, it ate your entire account with losses in one trade and your capital's all tied up in it. So what I've done is I'm not allowed to trade different styles in different accounts. I'll have a specific day trading account. I can only day trade in there. No long-term stuff. You can't go home with a winning trade and say, I'll keep this as a long-term swing. What I will do, if I feel that way, is I will actually go buy it in another account that's a swing trading account. It's because I've made those mistakes too many times in the past where I cross-mingle account styles, so I don't do it. And for anybody here who trades options, you'll know it's actually really simple. It's a really simple thing to do is to buy some, let's say, call option, right? Buy a call or buy a put, and you put it in your account. Next thing you know, it just expires worthless. Well, I can't have that happen in my 1% account. The goal is 1% per month, so I need to be consistent and mechanical about it. So that's the reason, Jeff. It's just a personal reason for me is I had a tendency to commingle trading styles. So for each account, I got a plan. Right? This account does this and this only. This account does this and this only. I'm not going to do day trading, swing, and position, options, futures, and Forex all in one account. I need them separated. How far out of the money are you buying the puts? From a time perspective, if I'm buying puts 90 days or more, and it's based off of the supply and demand zones, really, right? I'm looking for where do I think it's going to head to. That's pretty much it. I can go a ways out of the money, especially if I have time on my side. as you've seen, just in a couple days, we had a 10% swing. Going 10% out of the money right now on the S&P, it's at 37.69. 10% would bring me down to 376 points from here. Okay. That brings the S&P to right around 3,400. Could that happen in 90 days? Hell yeah. It happened in 4 days, So for me, the premium is going to be determined off what the market is doing at that moment, preferably at a moment, if I'm buying them, where nobody's afraid and options are really cheap, at least puts are. You don't look at their Greeks? I do not. And I don't know if that's necessarily a good thing, right? I think that from a statistical perspective, Greeks are probably really important to pay attention to. I just don't. I know. The way that I am. They've always kind of confused me, and I just kind of said, nah, it's fine. I know what I'm doing with regards to rate of return. I can anticipate market direction pretty well, so I'm fine. I don't need the Greeks. But I could probably do better if I used the Greeks and implemented those. Truth be honest. Let's see. All right, let me go to a couple listener questions here. And Karen, I think that you're here today. She asked this one, I think on Friday, but also sent it in or put it underneath the YouTube video, which is my preferred way to get questions from you guys. Merlin, what are the parameters that make a recession turn to a depression? So I would say there's two key words there, Karen. Number one is magnitude, like how quickly the data is deteriorating. And number two, longevity. How long does the data stay bad? So normally, a recession is just viewed as kind of a business cycle rotation, right? It's a normal thing that happens over the course of time. So you have a really nice bullish phase, and then all of a sudden, things start to drift down. That's normal, right? It's kind of like Elliott wave. Let me. Do I have a picture here? 1 second. I'll torture you with my wonderful drawing. My art professors would be so proud of me. Let me go there. And 1 sec, guys. Just drawing some stuff up for you. Okay. So if I do that. So Elliott wave is one of my pet peeves. Personally, I think it's just kind of a joke, but the basis of Elliott wave is really important. It says you have an impulse move and you have a corrective phase. And you have an impulse move and you have a corrective phase. You have an impulse move, a corrective phase, and then it changes. And you have, so what you have is 1, 2, 3, 4, 5, A, B, C. That is Elliott wave. And then in theory, inside of this 1, 2 part, right, you guys see here, and if I'm not making sense, just let me know. But you've got the 1, 2, 3, 4, 5, A, B, C. And then markets are fractal. So within this 1 and 2 piece, you could have a 1, 2, 3, 4, 5, A, B, C. And inside this one, you can have a 1, 2, 3, 4, 5, A, B, C. It's just this fractal nature of markets. Now, I don't really subscribe to that whole thing. I think it's kind of a pain in the butt to think of every little 1, 2, 3, 4, 5 A, B, C pattern that you see and apply it to every chart. What I do subscribe to wholeheartedly, and I think it's one of the foundations of my trading, is you are generally going to have an impulse move and a corrective phase. That impulse move is very strong. Is kind of steady and ongoing and long, whereas this is the impulse and this is a corrective phase. And that corrective phase is generally sharp, aggressive, but short-lived. And then once that's done, you have the same thing. So, you can look at this as bull market, and then right here, this C part here, which I have as a corrective phase, would be a recession. It's the nature of business, right? It's just the way things flow. And if I show you a chart of the S&P 500, I think it's pretty easy to look at this. Oh, 1 sec. Let me go to a weekly here. Right? And look at this and say, we had our impulse, correction. Impulse, correction. And I guess the question now is this correction something that leads to a longer, more pronounced market sell-off? So for example, if you look at what a recession is, and we hit a recession back here, right? This was a recession. Now, I would argue that this was a one-off black swan event. You guys can argue with me on that one if you want, but this technically was a recession. And what we saw was kind of a retracement from that business cycle run-up. Generally, a recession is going to be something that's localized to a specific economy. is a little bit different with what happened with COVID, because a recession, like we can have a recession in the United States, but Europe is fine and UK is fine. Generally, a recession is something that's localized. A depression is something that's much more global. And I would contend that the recession we saw in 2020 was a global event, but that's predominantly because of COVID. So, I don't have any stagflation on my chart. It hasn't happened for so long. I don't have that data. So as far as what causes a recession, or how does a recession turn into a depression, it generally means that you have a pullback in price action. Of course, most people look at the definition of a recession as 2 consecutive quarters of negative GDP. That's the easy one. With regards to depression, generally what you're seeing is a decline in GDP of 10%, which I think we are, if not past that, we're at it. I mean, GDP numbers have been slowing, and let's see if those continue on. Recessions, from my experience, generally start with a lull in spending. And I was sitting here encouraging you guys to spend less, right? I guess I'm one that's helping facilitate a recession, just because the writing on the wall to me says that this is actually going to turn into a depression. So let's stockpile, let's save up. Let's not spend like I normally would. Let's keep money close to the vest, so when the markets do implode, or if they implode, then I can deploy some capital and buy things on the cheap. When I say buy things, I'm talking about stocks and futures and things like that. So normally when you get to depression, you're looking at really big declines in construction and housing data, in international trade. So it's a much broader measurement of economic malaise. Whereas a recession generally is just a downtrend in the market, a little bit of GDP contraction, not that big of a deal. Especially when you never. Yeah. Well, a recession is when you're out of work, and a depression is when you're all out of work, right? Yeah, exactly. That is what I am waiting on. Yeah, Lisa, who knows? I do think we're going to head lower, as I've said many times in this program. I do think that these lows from 2020, the COVID lows of 2020, are absolutely in play. And again, that would be a 54% decline from the peak that we established back in January. So, if panic is when your spouse is out of work. Well, not if you have the right investments, not if you have income streams coming in. But Karen, that's how I would view it. There isn't a real clear defining line between recession and depression. I think, again, depression is really more about the severity, the magnitude of the declines, and far greater reach with regards to impact on the global economy. And, as I watch this data come out, I'm seeing, global data start to slow down. You're seeing maybe other countries going into recession. By the way, did you know that we almost hit another recession trigger the other day? So one of the keys to recession is an inverted yield curve, which typically is the 10 and the 2. Right? So here's the 10. Typically the 10 and the 2, although Bill Addis would say it's the 10 and the 1, but most people look at the 10 and the 2. So here is the previous. I'll put this on a daily so you guys can see this actually happened last week. Here on the 13th of June, we came right down to it. We were at 0.006. We didn't go below 0. Going below 0 would mean we have an inverted yield curve, but we did not. We just basically kissed it. And the next day, same thing. We were basically at 0.038. It's 0.004, and then we bounced from there. So thought that was kind of an interesting one. I'd definitely be keeping an eye on this, but we did not get the second inverted yield curve sign, which normally leads to a recession in 6 to 18 months. But thought that was noteworthy. What do you think Warren Buffett is waiting to buy? I think you'd have to wait till that moment and see when things are really in a climactically bad situation. So, for example, you look, he was big in the financials, Wells Fargo, Bank of America. I mean, he funded Bank of America big time and got a lot of warrants for it and made a lot of money. What's he holding on for? I don't know exactly what he's waiting for. What I think what surprises me about Warren Buffett is, while he may have one of the best track records ever for a financial person, he just is a buy and hold guy. If I'm in the situation, I'm managing billions of dollars and I see all this economic data, to me, the simplest solution is just go to cash, right? Because if the market drops 20%, I don't lose 20% of my portfolio. And I'm surprised that he doesn't do more of that. But I guess he's got so many shares of companies that if he tried to unload it all, he would crash his own stock. So don't know what he's waiting for. If I knew, I would be Warren Buffett, and I don't know because I'm not Warren Buffett. I'm considerably younger, much more handsome. Let's see. Hey, good to see you, Chris. Thanks. Seems we were close to depression-like figures, and nobody can even admit that we're already in a recession. Must be job numbers holding up. Yeah, as I mentioned on the previous shows, there is an organization. I forget exactly which one it is. It's not the BLM. It's the Economic Board. There's some government agency that will actually officially put the stamp on recession. So, when we get our final GDP number, let me just check here when that final GDP number is coming out. Because we've already had the preliminary GDP, we've had all this different stuff. Look at the calendar, and I'll filter it here for just the U.S. We'll get none, we'll get U.S., and then we'll go none, and I want growth. Just to see when that final GDP number comes out, which I think, yeah, it's next week. So next week, we're going to get the final GDP reading. The previous number is negative 1.5. We are probably going to come out at another negative GDP number. And that would be its second consecutive quarter of negative GDP. And then the media will right away start saying, hey, we are in a recession. Now, that is not official. That's just what the media says, right? It's like TMZ reporting on something. It's not exactly true, but it probably is. What will have to happen is this agency will say, okay, we are in a recession. Normally it has to do with unemployment. And again, when you look at things like the unemployment data that's been coming out, U.S. is smelling like roses. Let me just get none and put on employment data. I mean, U.S. looks great with regards to employment data. Was it 2 weeks ago? Or 2 weeks ago? No, 3? So here's your unemployment rate. 3.6%. Even though we were higher than expected, it's still remarkably low. This chart right here is just phenomenal, and I'll scroll back so you guys can see more data. This goes all the way back into 2005. Here is all the way to 2002. I can get us all the way to 2000. I mean, we've never been this low. Never. I mean, that's pretty phenomenal. I think actually there are a couple points in 2020 when we were down to just below 3, 2.9, I believe. But, I mean, this is unbelievable. Until this starts to tick up, there's no real fear that the economy is going to collapse. However, I don't know if you guys know who Larry Summers is. So Larry Summers used to be the members of I don't know if he was the chairman of the Fed. I think he was. But he was one of the members of the Federal Reserve. He says, we should welcome in layoffs, and the markets will do better if people get laid off. So let's say we have mass layoffs. That's going to help fight inflation. And he's absolutely right? If you have everybody out of work, that means they can't spend, which means prices decline. Yeah, it fights inflation, but the damage that that's going to do for the economy is far worse than inflation, because now GDP is going to absolutely crater. All the economic data is going to decline. CPI numbers are going to fall. PPI numbers are going to fall. Employment is going to surge, and then we find ourselves in that stagflation category, which to me is, I don't think it's going to happen. I think it'll start to show the cracks of rising unemployment by like September and October, but I really think that it's going to be next year. I think next year is when we really get the data just compiling, layoffs coming in, and then we start to see things get really bad. I may have said BLM. It's not the Bureau of Labor Management. It is the Bureau of Labor Statistics, although I think there's something, it's another agency. I'll find out for you guys. But unemployment low. How about employment participation? Correct. So, one of the numbers that we keep reading and seeing, and I've mentioned this one to you guys several times, is you have the U3 unemployment rate. And there's a table here put out by the BLS, which I would encourage you to check out. It's really kind of a cool piece. BLS. And there is your table of unemployment. Right now we are being told that it's this line here, this U3. Right? U3 was the total unemployed as a percentage of the civilian labor force. That's the official rate. But it doesn't count people who've fallen off the books or just simply aren't looking. Right? If you look at U6 is total unemployed plus all persons marginally attached to the labor force plus total employed part-time for economic reasons as a percentage of civilian labor force plus all persons marginally attached to the labor force. So this is people who are still looking for unemployment. To me, that's a much better number, and I would argue we're probably higher than 7.1. But it doesn't matter. What matters is the trend, right? And as I just showed you that chart there on Forex Factory, where did I have it? Oh, I must have There it is. You know, that trend is gorgeous. This downtrend since 2020 has been beautiful, and we're right back to these lows. But I see layoffs coming, folks. I definitely do. I don't know if anybody saw the Homebuilder numbers. So we'll talk about Lennar and Toll Brothers right now, which is an interesting one. So Lennar, they came out with earnings. Let me see if, yep, here's Lennar's chart. So as you guys know, there's KB Homes, Lennar, Toll Brothers are kind of the really big home builders, right? And they build giant tracts and they put in all the amenities and you can kind of design what you want. Pretty cool. I've had a couple people that have bought from Toll Brothers particularly, and I love the homes. They're actually really nice. However, the report from Lennar, their revenue is surging, right? They had great revenue today, so they popped in price, up 1.58%. But what did they say? They said exactly what I have been saying, that at some point, the interest rates are going to start to impact people's consumption. So because rates have gone from under 3% to over 6% in less than 9 months, all of a sudden, they've seen a lot of people backing out of their orders and not making purchases, probably because they can't get the credit. So now what's happening is Lennar, Toll Brothers, KB Homes are doing what? Pulte Homes. They're lowering their prices. So here we go. I mean, that's good news from an inflationary perspective, but bad news for the overall housing market, because if the home builders are starting to lower their prices, that means that you're going to start to see residential prices fall as well. So I unfortunately guess I didn't sell in time to capitalize on that nice little market downturn, but that's just starting, right? And if rates keep rising and the prices keep dropping, we'll have a flood of inventory on the markets, and all of a sudden we find ourselves in a bad situation. But we're not there yet, right? We still have plenty of distance between that and the runway landing, if you will. So thought I would share that with you. I thought that the Lennar news was pretty important today. Let's see, what else did I have? Some questions you guys sent in, I just don't have answers to. Michael said, I see that BTC USD traded down below 18,000 over the weekend. However, TradeStation does not show it on the charts, and TradingView does. Any idea why TradeStation does not show it? The only thing I can think of is that TradeStation might be using just the futures prices, right? Because you can see here, the futures price, the lowest that the futures have gotten is 19,600. But if I look at the spot price of Bitcoin, here's Bitcoin. You know, we got all the way down to 17,592 because it's not including the weekend, right? No, I did not short any of the builders, Rob. Nope. No. Would have been a great one, though. So that might be part of the reason, Michael. I don't know. I don't use TradeStation. I'm actually pulling all my assets out of TradeStation and moving them to other accounts just because I'm frustrated with the platform and the customer service and TradeStation, period. So I'll be moving on and not using their... I don't even show their platform anymore. I usually have it up, but... oh, sorry. Thank you. There you go, Michael. So let me recap that. Here is the spot price, okay? And this spot price is showing me that price came all the way down to 19,000 or 17,592 right here on the 18th. Now, if you look at the futures chart, you'll notice it does not include any of that low point. It looks nice and smooth here, but yeah, it was closed. It missed that big blow-off sell-off. There's the chart. Sorry, everybody. Whereas... yeah, I'm not exactly sure where TradeStation is getting their data from. I know they go through a crypto exchange, but crypto markets are open 24/7, so I can't imagine that they were using an exchange that was closed, but I don't know. I'll log into TradeStation and see if I can find something there, but like I said, I really don't use TradeStation. Done with it. All right, let's see. Next question I have. And there's a lot of crypto stuff here. So, KF, have you heard about Solana and its possibility of going to zero? Altcoins Daily had that warning last night in their video. Look, I think every cryptocurrency has a potential to go to zero. I would say, I mean, they all have a probability of going to zero, including Bitcoin and Ethereum. However, if you look at Solana and the problems with Solana, Solana is somewhat centralized in the way that its governance is done, but it's also centralized in the way its tokens are issued, pretty much owned by VCs. Also, their system keeps going down. So if you're running a business and your system keeps crashing, I mean, I could do a simple example here. Let's say we all have an ATM card, and that ATM card is the only way that we can access our money is by using this ATM card. So you've got network A and you got network B. Network A, 24 hours a day, 365 days a year, never a problem, and plenty of ATMs all over the world. ATM B, breaks regularly. There's some periods where for 19, 20 hours, you can't access anything. I'm pretty sure that every single one of us would go, well, I'm going with A. I want the reliability, right? If I'm going to be building something on top of that network or needing that money, I want to make sure that it's open. Solana crashes all the time, so I don't see Solana going to zero, but definitely it's fallen in its graces on my list of being a great coin. Not a big fan of it. I do own some. I won't be adding any more to my portfolio anytime soon. Let's see, what else did I have time-wise? I'll answer this one question here real quick, which is another crypto one. It's kind of a long one. This is from KF as well. Now, as you guys know, if you're in the U.S., you can trade on Kraken, Coinbase, Binance.us, and a couple of others. But really, it gets a little bit shady when you start trading internationally. But that's where you get leverage and margin. So KF says, how far is the maximum amount that we can make on a short trade, for example, in a cryptocurrency? For instance, let's mention Luna. The way it went way lower than zero. It didn't go lower than zero, right? It did not go lower than zero. It went sub 1 penny, right? So let's go. I'll just bring up Luna here since I actually have it. Do I have Luna or Lunk? 1 second. I'll make sure I show you guys the chart this time. Let me go there, and I'll show you Luna. Yeah, I don't have the old one. I don't have. Let's see if I can bring up Lunk. I'll just add it in. LUNC is that ticker name, and there it is. Okay. And we will go to, there's your daily of it, right? It didn't go negative. It just went under 1 penny. So they can't go negative. We talked about this the other day where don't talk about Solana going to zero. We talked about that with crude oil because that's a deliverable futures product. So that was the risk. You had to unload it. You had to pay someone to take that oil futures contract because you had no place to park it. So crypto will not, you won't go to zero with regards to your crypto, or you won't go below zero with regards to cryptocurrency. So let's say if I had shorted Luna from $100 limit price on KuCoin, would my short position be closed automatically by their system once it gets to zero, or can it go lower than zero? It can't go lower than zero, but what could happen is at their discretion at any time, they can close out your short position. So my assumption would be at a certain price point, they would have just closed it. I don't know what those thresholds are. Every brokerage firm has their own rules with regards to closing you out. But in that situation, I mean, you'd be in one of the biggest winning trades of your life if you shorted from $100 on leverage. Holy cow, it'd be amazing. All right, is there any specific limit that they would close me out? Nope. No specific limit, but again, it's in their terms and conditions. All right, let me read through this. This is your economic calendar for tomorrow, the 22nd of June. The big piece here for me is this one. You got Powell, right, at 6:30 in the morning Pacific. So right as the market's open, Jerome Powell is testifying in front of the Senate Banking Committee. He's doing that Wednesday and Thursday. Other than that, you can see for Canada at the top, you got some CPI numbers coming out. That's important. They're expecting inflationary pressures. You can see almost everything on CPI expected increase for Canada. You also have Swiss National Bank has a couple members speak, or their chairman will be speaking, but I don't see too much impact there. Remember, Swiss National Bank raised from negative 75 basis points to negative 25. That's substantial. They've been negative for so long. It's crazy. Consumer confidence for the euro, and that's pretty much it. Some Australian flash manufacturing and services numbers, but nothing that's overly noteworthy for tomorrow. All right, as far as guests go, I mentioned that tomorrow I'm hoping to get Trey Lazare on the program. I'll reach out to him as soon as I get off this show and contact him and make sure that he can either come on. If not, maybe he can't make it on the program. We'll get him another time. But I want to talk about, I mentioned before how it's so important to look at a broker from the perspective of what products do you offer? What are your margin rates? There's specific margin rates, and there's other brokers will give you much lower margin. If that means much more bang for your buck, why would you not want to use that? Unfortunately, a lot of people just don't know about it, and they go with the big names, and they pay more for their margins. So we'll see if we can get him on the program, and let's see what else I got. I'm growing more and more bullish about Cardano. They are growing slowly and correctly. Yeah, I'm bullish on it too. It's just they're very slow. They're academics, right? When's the last time you saw an academic do something fast? They don't do it. It's slow. So, but maybe that's what we need. We need that slow, methodical, make sure everything's right, make sure it's not going to crash. And I'm in that camp. I am definitely more of a Cardano fan than Solana, even though Solana does so many transactions per second. I don't care. Let's see. Chase, someone posted on Reddit today a better centralized solution of Solana. So guess it's SQL. You can build a better network in normal code. Yeah. Well, we'll go into the SQL debate, but there's a lot of other ones that are coming out. A lot of other competitors to Ethereum. And again, if Ethereum doesn't fix their proof of work and move over to proof of stake, they'll continue to lose market share. That's the big deal. So you talk about dollar index dropping after hours. Wouldn't surprise me. It's not falling fast by any means, but here's your 5 minutes. Nah, I don't see the Dixie dropping. It looks like the Dixie is dropping in the after hours. Doesn't look like it's dropping to me. Here's your 5 minute chart. It's kind of just drifting sideways on my chart. All right, everybody, that's going to do it for me. If you want a specific topic covered or something covered, go to YouTube, put them down below the YouTube videos. Those of you who've been commenting on that, I appreciate it. Saw a whole bunch of comments come in. I think I still have a couple to get to, which I'll get to on tomorrow's show. So just go to the YouTube page under whatever video you were watching and just comment down there what you liked, what you didn't like, what you want me to cover. If there's something specific you want to show me or have me address, you can email me, TraderMerlin@gmail.com. That said, I'm hoping for a bullish day tomorrow so I can get some puts going on this market. I'll see you guys tomorrow. Take care, everybody.